Okay, another variable rate update. December 7th is the meeting for the Bank of Canada. Predicted to be 0.25%. That's what most reports are saying. It seems to be the wide sentiment on the market. Of course, we don't know for sure because they do decide right at the last second and change their mind and sometimes don't do what they're going to do, but I think that's the fair prediction. I did a video last week about trigger rates, and so if you have a mortgage trigger rate, that's a worthy video to look at. But in general, at the variable rate mortgage, the thing you need to know about the past couple weeks is we've seen a pretty big uptick in government relief programs that people are unaware of. And so there's always been relief programs, but basically what's happened is that the government said, yeah, our relief program does qualify if you're if you have a variable rate mortgage and those payments are becoming very stressful for you. So remember, not everyone's in the same boat. Like at some point, fixed rates renew, variables go up. Like I think that this is a lost thing on people is that, it's there, if rates are up, rates are up. And so anyway, you do have there is some relief programs that exist. In particular, lenders are allowed to amortize things out to 40 years. I'm sure if you call banks, they'll tell you that's not the case, but they are allowed to do that. Now, if you want to stretch your payment out, this does not require requalifying or anything like that. You can do so, and I have an email drawn up. So reply to email and say, hey, look, I'd like to have the email on how to stretch my payments out, which means you pay the mortgage off over longer to lower my payments with a variable rate mortgage. Do that, and I can send that to you directly, and you send it off to your lender, and away you go. So you just have to keep in mind, obviously, mortgage pays off a little slower from that perspective, but that might be okay. And so I think that's meaningful as well. We have a new video series where we talk about different ways to increase, to make up your payments. I think that's helpful as well. And I think that makes a lot of sense. I want to also say that this is important at this point, is that a lot of variable rates is because we're going to the point where most people have a higher rate in their mortgage, where they had a fixed rate. There's still some stragglers that'll take a couple of years for it to renew, but as people pay out their mortgages, we're getting to a situation where people are going to have higher rate mortgages. And I think that one thing that we didn't do at the beginning of the year is that because people have interest rates of 1.7, now you can refinance that as 5%. A lot of people not refinancing. But I'm a little worried that, if we look in a recessionary territory, that liquidity gets reduced. What happens with that is it means if you have a line of credit or a credit card and it's not being used, then they might just cancel it. In addition to the fact that we're seeing next week, there's going to be under the curtain, so to speak, there's going to be a lot of changes that lenders are forced to make to work with OFC, which is the regulator, on what they can do and not do as far as underwriting. And so suffice to say, I think that getting a deal approved and a refinance approval in tandem with a higher qualifying rate is going to be harder. I say all this because now is your time to refinance. You're going to refinance and get a similar rate, and this is going to be your best chance to qualify for the most amount of money you're going to need, as well as pay a similar rate. So this is what I want you to think about. If you have any debt kicking around, and look, if that debt has been sitting with you for 6 months and you haven't found a way to pay it off, unless you're going to see an increase in your income, you have to be realistic that might not be the case. And so we need to chat. Is it time to refinance? Roll that in. Car payments, anything like that. Let's do that, make that cash flow work. You could really look at, yes, you could do renovations into your mortgage. That's a possibility, but really think about value-added renovation. I talk about this all the time. Renovations where I'm going to add a suite or I'm going to add an extra room where I can get the extra money for that instantly. That is a way to really utilize from that perspective. Now, another thing I can think about, and I have to be cautious of this, but if I have a situation where, I think I'm going to lose my job, maybe I'm borrowing some living expenses. Anyway, now is your time to refinance. Now is your time to do that when your rate is the same as what you can get today by refinancing. There are some second mortgage options that lenders are interested here, and we would talk about that on an individual basis. So anyway, that is the update for this week. If we can help you with anything, please reach out. If a friend could value this video, please do share with them. It also really helps us out if you subscribe to our channel. We're really trying to up that for our subscribers on our YouTube channel. So if you can help us out with that, just press the subscribe button. Oh man, that would be amazing for us. And hope you're having a great week, and we'll talk to you soon.